All right, everyone. So Canadian real estate market, it's untouchable, it is bulletproof, and it will not crash. However, people stop talking about the 90s because they feel that there's no relevance to today's age and to today's market. But shockingly, there are too many similarities. So I have a couple of points. We'll get into the 90s, we'll get into today's day and age, then we'll split the differences, see how shockingly similar it is, and then we'll get into something else, which is the analytics and the graphs when it comes to the future, tariffs, artificial intelligence, and unemployment, if you stick around till the end. So let's get right into the video. All right, so in the 90s, people that went through it, they say it was shocking. Overnight, everything collapsed. We didn't know what to do. However, right, even if they say it, the current generation doesn't believe it because they like to say this time it is completely different. And they are absolutely right, because this time around, it will be much worse than in the 90s. So let's get into the data. 1990s, inflation rose sharply in the late 80s. Bank of Canada hiked rates to 15% by the 90s. Mortgage affordability collapses overnight. Buyers could not qualify or carry payments, even as prices fell. Sales froze, prices dropped by nearly 30% plus minus in Toronto and Vancouver, which are obviously big hubs. Many owners stuck in negative equity for decades. And that's something that a lot of people don't believe it actually can happen, right? Because they're used to that particular graph just moving forward, right? So they don't believe that they could actually own a piece of property and they could be stuck in a declining market, in a choking market for decades, right? Negative, right? Now, 2022 to 2025, post-pandemic inflation surge in 2021 and 2022. Bank of Canada raised rates from 0.25% to 5% within one calendar year. That is crazy, record-breaking, right? Monthly payments doubled or tripled, killing affordability. Sounds familiar to the 90s, right? Buyers sidelined despite 15 to 25% in price declines in some markets. Sales volume at historic lows, demand not returning. Some recent buyers already underwater on their mortgages, right? So some of these people that bought at the peak are riding that deficit or that choking market, that declining market, right? Their property that they owe money on is probably more that they could sell it for. So now let's split it up. Like let's bring it together. Why it's shockingly similar and why data is showing that it's not only similar, it is actually worse. We're in not so good of a situation comparing to the 90s. And the 90s, speaking to people personally from experience, I'm speaking from experience, and you watching, if you were from that era, please comment, right? Because it just gives more weight to the channel on the comments and we can all discuss it, right, in the community. However, record household debt level in the 90s, average household debt to income ratio was around 85 to 90%. Now we bring it to 2025, is over 180%. And we feel it, right? Because doesn't matter how much money you make, and even if you're employed and have a job, the cost of carrying, it's not possible. Like you cannot just give birth to more money unless you go into more debt, right? So this is amongst the highest in the world. This means Canadians have less room to absorb shocks. Any rise in rates, job loss, or income drops hit harder and so much faster. Debt service costs at a percentage of disposable income are at multiple decade highs, and even small changes in rate outsees impact. right? I mean, and we have seen that. Even small movements, quarter points, half a points, they're small, but they're enormously big when it comes to these mortgage sizes, right? And they impact these families. And even few $100s, there's no room for extra few $100s, right? So higher standing home prices. In the 90s, average Toronto home price was at $250,000 before the crash. In 2025, many markets have average home prices over $800 to $1 million. And we know even walking today, even with these prices that have corrected a little bit, right? Like it is ludicrous, right? Like there's not much you can buy for $1 million. Even with price declines, affordability remains worse than in the 90s because incomes haven't kept up. A 20% drop today still leaves homes historically expensive, meaning buyers don't feel urgency to jump in. And we see that, right? Even all these listings, the listings surged. Obviously, condo market has been hit enormously hard, and we'll get into that right now. However, people don't feel that FOMO, fear of missing out. They don't feel the urgency because they see all these for sale signs. They have more choice. They want to make sure they calculate it right, and they want to see what will happen with that future economy, that uncertainty that I would love to talk to you about towards the end of the video, because I have graphs showing what the top CEOs in the world and their companies are actually talking about. All right, so greater reliance on speculative pre-construction investment. In the 90s, pre-construction sales existed but were limited in scale. Most buyers were end users. Enormous, right? Like this is huge piece of information. It was scaled and they were end users. Now, 2025. Pre-con makes up a massive share of urban housing supply, with many investors holding multiple units. Falling resale prices mean many pre-con buyers are already underwater before closing, and we see it day in and day out, obviously. Assignment sales are flooding the market, often at a loss, putting extra pressure on resale values. 100%. In fact, I mentioned this years ago. Pre-construction is also tied to the current freehold real estate market and other markets, which means everything is kind of linked together, right? Because people would borrow from one piece of the property that they would have equity in, and they would just place that in their pre-construction and all of that stuff. So they're sinking two of their ships now, right? So which is very, very, very dangerous when it comes to the actual reward, right? Like higher risk, but higher reward as well. AI and automation driving jobs losses in high-paying sectors. This is very important. Listen up. In the 1990s, job losses were concentrated in manufacturing and government programs. In 2025, white-collar sectors like tech, finance, and legal are very groups who could afford expensive home. Now they're being vulnerable to AI-driven cut jobs, right? So let's talk about it. Like all these white-collar jobs can be replaced by a bot, by a robot, by a phone, by a system or a software, right? But now these folks in the 90s were the top dollar paying employees, CEOs that finished school, finished university, masters, whatever, got a job, and they had some kind of security. And those folks were the ones that are actually buying all these homes. Luxury is investing. Now these guys are in jeopardy, right? Global economic uncertainty adding extra instability. In the 90s, the market downturn was mostly domestic in cause and scope. So this is something that we have to take note, because in 2025, the housing market is now tied to global capital flows, geopolitical risk, and foreign investor policy. Supply chain disruption, tariffs, and global interest rate trends all hit housing faster, much faster than before. So what does this mean? So basically Canada cannot recover on its own because it's relying on everyone else. And if everyone else is slowing down, sinking, or changing their strategy in the world, we are being impacted. So that's a huge problem that we have nowadays. And I'm sure it's not only Canada, but we're talking here about Canada. So now let's get into something that I picked up from this beautiful website. It is the IoT Analytics, founded and operating out of Germany, is a leading provider of strategy of marketing insights. So basically, they're gathered information what the top CEOs from company, and they're doing the analysis, right? Like what they say, what their concerns are, and all of that stuff. So they crunch it into all these graphs and numbers. And companies like Dell, Rockwell, JP Morgan, Nvidia, like top dogs in the industry, right? So they want to make sure what are their concerns. And let's get into what the CEOs mentioned between 2019 and 2025. The word, perception, and the topics that they were talking about. So the CEO mentions of tariffs grew up from, like 2019 to 2025 by 43%. I mean, you can see the graph, and especially like we can see here from like 2024 to like at Q3, it started to pick up, and then we saw this exponential growth, right? And we obviously saw it, tariffs, like all this uncertainty in tariffs. So let's move to the next slide. So CEOs mentioned uncertainty, right, from 2019 and 2025. So this is what was happening. Like we have seen the uncertainty obviously jump to 66% around the pandemic and all of that stuff, which is obviously very common, like lots of uncertainty. Nobody knew what to do. But look, if we're moving forward, like even the uncertainty when we had the interest rates hikes, right? Like during 2023, we have seen that spike, right? I would like to guess it's somewhere around 30 to 35%. But now again in 2025, we have seen, and we do see, a sharp incline, and we're now sitting at 35%, right? So which is huge. Think about it for a second, right? And by the way, half of the population is saying and claiming we're in a good position. Why is everybody panicking? Like interest rates are feathering down, like they took a pause right now, but real estate always has to go up. Well, maybe, but we have seen lost decades and gaps even in our Canadian real estate market. So CEO mentions of agent AI versus copilot versus chatbot between 2019 and 2025. So listen up. Agent AI spiked from Q3 2024 exponentially. This is like a hockey stick, almost like a 90, right? Like we can see it on the graph. It is nuts, right? So we now see less and less talk, or less and less focus from these CEOs of the top companies on Copilot and chatbot, even though chatbot has seen a little rise. So obviously this is due to the AI, artificial intelligence, right? So let's get into the actual layoffs, right? So everybody's talking about that, and we know that if people cannot provide, right, earnings, or if they cannot make these earnings, they cannot afford anything. It's very simple, right? Yes, they can put a pause on the mortgage. They can defer it for a month or 3 months or whatever, depending on your institution and the bank. But essentially, you need an income or earnings to survive. As simple as that. Which brings me to another point, right? They say, well, just keep the real estate, just keep it. But what if you cannot keep it, right? Like what if you don't have sufficient funds to keep the property, right? Because people have problems with their cash flow. Not everybody is a multimillionaire that they can write it with ease. And even with them, we have seen it. We've seen misjudgments. You know, big companies went bankrupt. As simple as that, with all these massive projects all around Toronto and Toronto GTA. But let's get into the layoffs. So CEO mentions of recruiting and layoffs between 2019 and 2025. And we see that recruiting started feathering down from 2021 Q3 to Q1 2022. So it was a steady decline. We have seen a sharp decline when the interest rates started to go up, because all these companies are restructuring all of a sudden, and they're trying to make sure that they're running lean as much as possible, because the cost of borrowing is so much more. So somehow they have to find that gap in order for a company to be profitable. And you can see that it's even in Q1, it's even declining, right? Like it declined by 4%, and it keeps declining steadily. So it's in that particular phase, right? But if we go through to the graph of layoffs, right? Like obviously we saw a huge dramatic hockey stick spike during the pandemic in Q1 and Q2 of 2020, right? So we went back, to somewhat normal, I guess. But then, that spike of people being laid off, it's just jumped exponentially in 2023, and now we see it here that it's on the rise again in Q1 of 2025. So if we have to kind of summarize this video in a couple of words, I think everything that we knew from before, in the 90s, in 2008, in the 1929, in like you pick any era, you pick any of these jumps and falls and wins and losses, right? I think they were all a kind of you could kind of predict them, right? Because even today we can predict, because it's shockingly similar to what we have already seen. However, now the game is completely different, because now we have artificial intelligence and we have these robots that are replacing you. And now I know you're probably saying right now, looking at your screen, you're saying, well, you know what, like we had the industrial revolution, we had the manufacturing revolution, all these robots making all this stuff. Yeah, I understand, but it would be hard for you to pace or to kind of align yourself to fix a robot, an AI system, because the AI system creates, and then another AI system fixes this AI system, and that this system creates another AI system that fixes another AI system that's probably better, more efficient than you and I, right? So like, just summarizing all of that stuff, you don't fit into this game anymore, right? Yeah, are all jobs going to be lost? Absolutely not. But let me ask you a question. Let's say right now, let's say an IQ level, an average or normal IQ level is at like 135 or 150 or whatever it is, right? Whatever. Let's pick 150 for argument's sake, right? And if the artificial intelligence is already there, right? So they can already do everything better than I can or we can in every segment, every topic, right? All right. So, but if you're sitting across from a human, right? And that person is a genius. So they're hovering around 200 IQ, 2 and change, right? So yes, you can still carry a conversation, right? Like obviously nanophysics and all these other segments, I cannot talk about that because they're at the higher level. They can understand it, they can connect it. I don't have the know-how My brain doesn't work like that, but I can carry a conversation on a basement level, right? Now, when we get into artificial intelligence, let's say they're at 5,000 IQ, 25,000 IQ. So where are we at, right? So this where everything kind of now is summarized, that this is becoming a huge shift, is becoming a financial shift, and we're introducing a new level in this game of life that nobody knows the outcome, right? I truly believe and I hope that this artificial intelligence is intelligent enough to understand that obviously we like to live, right? Like that they steer their intelligence towards a positive, right? So that it keeps shifting towards a positive, helping the environment, helping the planet, helping the crowd, helping the financial sector, helping the health sector, helping everything, right? So maybe that's the new era, and the new will be phenomenal, but we don't know it yet. So for now, the 1990s are not only shockingly similar, they're in fact worse than they were in the 1990s. So if you feel that someone else would be able to gain some valuable information, please share this video, and I'll see you in the next one. Thanks for watching.